Hey guys, welcome to Doji Stocks. This is my first video on YouTube. So the point of this video is just to get an understanding of stocks and charts and the anatomy. This is going to really be helpful for anyone that is trying to get their feet wet and venture out into the world of stocks and charting and TA, which is technical analysis. Okay, so I'm going to make further videos explaining different things. So it's all, remember, this is all educational. This is not a recommendation to buy, hold, or sell any stocks or any plays. This is educational purposes. Okay, so what we're going to do is we're going to talk a little bit about the basics of a chart. Once we do that, we're going to look at the anatomy of a candle to understand what a candle is telling us, because obviously each candle, it's telling us a story. So we're trying to see what the candle and the stock is going to do in the future. And then finally, we're going to review a little bit of the trends. There are three trends that I want to show you. We're going to look at a live chart with you, and we're going to find and identify an ascending channel, a descending channel, and also a range trend. Okay, so let's talk a little bit first about the body of the candle. Okay, so in a body of a candle, here's an example right here. We have two colors. We have a green and we have a red. The green indicates that it's bullish, meaning that it went up in value. And then a red means that it's bearish, meaning that it lost value. Okay, so we're just going to make believe this candle is a one-day candle. Okay, so it opens at 9:30 in the morning Eastern time, and then it closes at 4 at Eastern time as well. Okay, so this is just for an example. So make believe this is an apple candle, right? And for one day. So the apple candle opened at 9:30, and it started right in this line right here. Okay, as you can see, it says open. So let's say, just make believe that Apple was $10. I wish it was, but let's say $10. Then as the day went on, it started losing value, and it went all the way down to the low. Okay, so from $10 it dropped to, let's say, $5, and then as the afternoon came, it started going up in value, and then at one point of the day it went as high as $15, and then as it started going towards close, it closed at, let's say, $12. Okay, so it opened at 10, it closed at 12, so it had a $2 difference. So that's a bullish candle. So that's how this would look. When we look at a candle, you have the body here, and then you have these little lines here. These are called shadows or wicks. As you're going to see on the candle, each candle is different. And once we go on the chart, you're going to see these wicks could be different lengths. They could be much shorter. They could be completely missing. You're going to see a really long one on top and a very short one on the bottom. So they have different names and points, and it tells you a different story. And I'm going to make another video down the road explaining different candle patterns. Okay, and then let's go back to this candle right here. This is a red one, so that means it's bearish. It lost value. So let's say the same example with Apple. It opened at 9:30 Eastern time. Let's say the value was $10. As the day went on, it went all the way to the high, and let's say it went to 15, and then as lunchtime came and things started moving, it started losing value, and it went as low as, let's say, $5, and then it went up and it closed, let's say, at $10. Okay, so let's say it opened at 15, it closed at 10, and it lost a $5 value. So because it lost a $5 value, it's a bearish candle for that specific day. Okay, so you were going to see many different candle patterns and different candle styles as we go on to other things. Okay, so the next thing we're going to do is we're going to go and jump into, this is Trading View. Okay, this is the platform that I use to look at charts and to do day trading and options and all that good stuff. So when we look at a chart, this is pretty much a chart. This is a 5-minute chart. When you go on here, you could change the ticker, you could change the minutes, you could change the hours, the days. So each one will give you a specific timeline. So each candle will represent whatever you're clicking here. Okay, so for this example in this video, we're using a 5-minute candle. So each candle is 5 minutes. Okay, so we're going to use CVS as our stock. Okay, when we look at this chart right on top here, OHLC. So what that tells you is the specific, if I hover over a candle, you're going to see how it changes there. So this candle right here, okay, if we hover over, and we're looking right on the top here, it's telling us it opened at $57.55 and went as high as 57.55. Okay, then it dropped to 57.36, and then it closed at 57.36. So this is it did, as you can see, it doesn't have any wicks because the price stopped at specific areas that the buyers and the sellers were agreeing on. So another example, if with a wick, is this one right here. Right, this is a good example here. So if I hover over, you'll see it opened at 57.03, then it went up 57.09, dropped to 56.88, and then it went back to 57.08. So there was like a 2-cent change throughout the day. So because it's a positive day, it went up 2 cents. So this is a bullish candle. Okay, so what we're going to do now is really look at different kind of trends. Okay, the most important ones are the ascending and descending channels and descending trends. Okay, that will tell us, okay, what is the stock doing? Okay, so an example right now that I could see right off the bat is this right here. So looking at this is going up like a staircase, right? So that is an ascending channel, okay? And it's an ascending trend. What does an ascending trend actually mean? Well, we're looking at, if you see the top here, the top here, top here, and top here, okay? These are the highest points. If you see that the one prior is much higher than the other one, that means that it's ascending. It's going up the stairs. So this is a higher high, higher high, higher high, higher high. And then the same thing on the bottom. If you're looking at here, 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 and then finally here, they're all going up as well. So these are called higher lows. Okay, so you have a higher high and a higher low, a higher high and higher low, which is higher than these two components here, right? Then the same thing, these are higher high, higher low, which are higher than this one. And then the trend continues until the higher high and the higher low are broken. So as you can see, then the next time in this example, we have a lower high and then a lower low. Okay, so that will show you that the trend is now broken. Okay, so if the trend is broken, that means that the stock is not going up anymore. So when we look at a chart, it's very important to use our lines to see where our channel and trend is going, right? So the way we do that is we just draw a line and we draw the line to see if we could touch as many candles or wicks on this specific line. We want at least 3 wicks or candles, the base of a candle, to touch. The stronger the line is, indicates that there's more candles and wicks touching it. So if you have a line that's touching 7 to 10, that means it's a very strong trend line. That is the support line, okay? And then the same concept on top, we want to do is connecting all the way up as high as you can. So it's going to look like railroad tracks pretty much, all right? And the key here, it doesn't have to be so perfect. Oops, sorry. We just want those wicks, and I'm going to zoom in a little bit. You see how the wicks are touching? We got 1 wick, 2, we got 3, and we almost got a 4th. Actually, we have 4 right here, and we almost got a 5th. So this is a very strong line, and this is your resistance line. Okay, so the line on top is your resistance line, and the line on the bottom is your support line. And then as soon as you see that the candle starts coming down, hitting the support, and then it breaks through support, and then the next candle continues to break, that means that this pattern right here, this ascending channel, is completely over. So now the new trend is the descending. And so this is another one we want to do. So another descending channel would be from here, from this candle, the high, right? We started here, and then we tried to hit as many wicks as possible, right? And then we do, so that is our resistance, and then this is our support. You see how, I'm gonna move this a little bit, and I'm gonna get this a little bit closer so you guys could see. One right here, it's touching, 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 and almost touching here. But if this keeps going, you got this guy right here that's touching, okay? So that is another indication of a descending channel. And also what's happening is with a descending channel, you have lower highs, one here, one here, one here, right? And lower lows, which is right here, right here, right here. Okay, so that's lower lows. Okay, so when you see that, that means that this stock is going down. It's in a downward trend and it's bearish. Okay. And finally, what I want to see if I could find a good example of, I want to find a good example of a range. Good example of a range. Well, this stock is pretty much so this is a good example of a range, okay? So if you're looking at this and you're drawing a line, remember, we always want to look at support and then resistance, right? So if you're looking at here, the range, this is your resistance line, and then this is your support line on the bottom here. Okay, so if we're looking at this right there, okay, you're seeing how this stock is coming into the range. It's going halfway, comes down a little bit, goes up, goes down to support, comes all the way up to resistance, comes back down, back to resistance, comes back down, goes up, goes down, and it stays in this range until it's broken right in this area. But then so this is a false breakout, and then it goes back down to our support line right here, and then it goes back up. It stays up a little bit, then it tries to get down, and then it goes back up. So right in this area, in this example, this right here, we're looking at range trading, right? So because it stays in a range, as soon as it hits this area at 5304, it gets rejected. And then as the stock hits at 5234, it bounces. All right. So this is another way of trading that a lot of traders out there like to use, is this range trading. But we're going to do another video in more detail in the future. Okay, so I hope you enjoyed the video. Please hit the like, subscribe button. Like I said, this is our first video, and we're hoping that this is going to be very educational for you guys. And if you have any questions, just jot them down, and then just we'll discuss them in the next video. We're also going to be starting a new Discord, so hopefully you'll be members. And that's it. It's all right. So thanks for your time, and we'll see you next video.